Hey, welcome back. Once again, Nokia released its Q2 report and we can see a drop in the stock price. It wasn't huge, but it was just enough to make the past year unprofitable. There is a decrease in sales, but a better overall margin. The profit and EPS were negative due to the sale of Nokia Submarine Networks, which by the way wasn't profitable, it was barely breaking even. This was part of Alcatel, which they bought in 2016, and even if they reported an overall loss on the fair value, they at least got more money now than this company would have ever made. We see India making about 70% of the loss and North America increasing a bit, which is very similar to Ericsson, which I'll talk about in a second. If you remember, about a year ago they had some restructuring and planned to fire about 10-15% of employees in a cost-saving program. Today we can see that it's already saving around 400 million euros and in total it should save about $1 billion per year. That kind of money is a huge improvement for Nokia. The good thing about them is that they have Nokia technologies providing a stable, let's say 1 billion in profit per year, which doesn't offset the others, but there is at least some stable money coming into the company. They also made around 394 million euros in cash flows, and thanks to the overall strong cash generation and balance sheet, they now plan to accelerate the buybacks and finish the program this year instead of 2025. Given the current price, I think it's a good idea, and it's just another thing where I agree with the management. They see the second half as better than the first, which would continue in 2025. Still, they cut the outlook for the whole year, which is probably the main reason why the stock fell. Anyway, the profit and cash flow outlook didn't change, so that's not very bad, especially with lower sales. Anyway, that's a point I want to mention. This is what they did in what they and the market call a challenging environment, which is still good for the current market cap. You know, a 20 billion company making over 1.5 is not terrible at all. Add great financials, very low interest, cost savings and potential to grow, plus 3.6% dividends and around 1.5% in buybacks, and this is definitely not bad. Even $1 billion wouldn't be terrible. But again, that's what they do in a bad year, imagine an excellent one. Or imagine if they get to the long-term targets they have, but more on that in a second. So overall a good quarter with solid cash flow generation despite sales normalizing. But the headline was record low or the lowest revenue since 2015 and stuff like that, which shows you what the market focuses on. If anything, this focus could mean even better potential if they reach the targets. I want to say a few words about Ericsson as well, since they also had a report a few days ago. We can see a significant 60% decline in India, which, the same as Nokia, is after huge growth. I remember for Nokia, India was up like 350% a year ago, so even though it's falling now, it's overall a significant increase if you look over a longer time. We can also see a 15% increase in North America, which, the opposite of India, fell by around 50% a year ago. This, however, can have a lot of potential for a recovery, although I think that will be something tied to rate cuts, but more on that in a second. They see challenging market conditions this year, which is also an effect of high interest rates. And one final thing, they are also in a period of cost savings, so it isn't just Nokia. This is a thing the whole industry is going through and it has nothing to do with the quality of the business. I also want to talk about them buying and selling companies recently. They are going to sell the submarine network business to France for 375 million and will buy Infinera for 2.3 billion. This way, they say they are going to gain a lot more exposure to data centers, which also have potential thanks to AI. About a year ago, they said they are going to lower the net cash target and focus on acquisitions, which can be a way to fuel the company's growth. If anything, they have the financials and the cash flows to keep doing this kind of purchases, which is why I gave so much importance to the balance sheet. I compared them to Ericsson, Cisco and a bunch more in the past, and what I saw is that these companies aren't in the best financial position. They are full of goodwill as a result of past acquisitions, which is not really an asset, it's more of an accounting thing and it has no real value. Nokia, on the other hand, has a lot of cash, very little debt and overall around the same equity as the market cap even when taking the goodwill out, which is very rare for a tech company. I'm not going too much into detail by the way, this is just about the Q2 report and some other developments. If you want a still relevant stock analysis with evaluation and price targets, check out this video. You can skip to around 6:15, it's a matter of 2-3 minutes. Another important thing that I keep mentioning will be rate cuts. That should boost the economy, which is pretty much the reason behind them, encouraging companies like Nokia's clients and even governments to focus on investing. It's one thing to get a 2-3% interest on a $500 million loan and a much more different one to get it at 5-6%, especially in the current environment. We see central banks everywhere already cutting or projecting a cut relatively soon, and it's likely even in the US after the recent CPI data. They even talked about this environment, and the thing with this kind of investment is that it's pretty much a matter of time until it has to be done. You know, if you want autonomous driving, smart cities, or even cloud gaming, which I remember Google was investing in, you need at least 5G. You can imagine how this jump, especially for driving, can really make a difference. Sure, you can do a lot on 4G or especially 4G+, but you can't reach the full potential of such a technology. If you want to make the cars interact with each other and the traffic lights, you can't afford to lose a few milliseconds. That, for a car even in a city, means literally a few feet, which can make all the difference. And don't forget that the 5G infrastructure industry is expected by many studies to have a compound annual growth rate of 50-60% or even more throughout the decade. In my opinion, and it seems to be Nokia's opinion as well, this has been postponed by the pandemic and high interest rates. I think for what they offer, this is a good price and there is a lot of potential to grow in the long term. I started buying this in late 2019 I believe, and I see it as a 20-30 plus investment for sure. I had the chance to sell for like a 2x in a year and a half, but that's not why I invested. A 2x given this company's potential would really be a waste. Sure, in hindsight, sell then, buy now, but you can't predict this stuff. For me, with Nokia, it's the same story. I once again record this part before the results are out. It's July 12 now, so 6 days before the report. I don't really care that much about what happens in a quarter, and I know the market is hyper-focused on the short term, but I think that's wrong. Especially for a company where you have seasonality like Nokia, you can have 3 negative quarters and then one when they make much more money than they lost. We even saw this a year ago. My focus is on the company's long-term targets. If they meet them, they should do very well, and if they don't, then this is currently around a fair value for a good company. You know, they have one of the best balance sheets in the industry, and I showed this before. There is proven profitability plus huge potential from 5G, digitalization and everything else. So if it happens, then it's a very good investment. If not, then it's still a good company with a decent dividend and some buybacks. It's about the risk and reward that they offer, which for me looks very good. Sure, it's not the Wall Street Bets 100x whatever, but it's fundamentally a good company. As always, what I cover in my videos shouldn't be enough for you to make any investment decision, so please do your own research before investing in anything. If you want to see more videos like this one, please leave a like and even a comment to help me out, and make sure to subscribe. Thank you for watching, and I'll see you next time.